I am back, or maybe you could tell that by the background. Although, of course, today I could certainly have this background anywhere that I'd like. But let's go ahead. This morning, since I'm back, first day, I wanted to really dig in. So I put about 4 hours into this video this morning. I wanted to set a new stake in the ground. I wanted to look at the new goalposts. I want to identify where I really think things are headed. So at the end of the news section, let's talk about the news first, because that's what, of course, is setting up my thinking about where things are going. I'm going to give you my general thinking about the economy, the market, Tesla's fundamentals, and Tesla stock. That will be at the end. Had a great trip, by the way. Enjoyed myself. I'm well rested now and ready for anything. I think we'll see. Anyway, let's start by looking at the news. Let's start with Tesla chair Robin Denholm. I'm not sure if she's using psychology or maybe whether she really believes this statement, but for now, I'll take her at her word. She says that Tesla is facing an uphill battle to get Elon Musk's record $56 billion pay package finalized. She told the Financial Times that getting the votes necessary to approve Musk's salary and move its legal entity to Texas was like climbing Mount Everest. She said, quote, "It's a huge hill to climb because getting 50% of the shareholders to vote, let alone what they vote for, is quite tough." So interesting that that's the situation that she's faced with, actually getting people to place their votes. This would be the institutions, retail investors, etc. So now listen, I'm only guessing this because I don't know it for sure, that all these votes are being sent to an independent auditor and nothing about the voting is known by the board, by, by we, the shareholders, anybody else. We don't know anything about the vote until the meeting. That gets opened by the auditors at the meeting. I think that's the way it goes. So we don't know what percentage have voted. The board doesn't know what percentage has voted. They don't know which people have voted unless they talk about it on X or let somebody know how they voted. And even then, that could be a game too. So I don't think, unlike, federal elections or local elections, I don't think we get to know anything about who's voted, when they voted, how they voted until the day of. So anyway, the board is working overtime to try to get the votes in and counted. So if you haven't voted yet, be sure to vote your shares. I don't think that what she had to say about this being climbing the Matterhorn is moving the stock today. Something is moving the stock today. Don't know why. It's going up today after being down 2 days ago and kind of flattish to uppish yesterday. I'm really having a hard time seeing how the news right now is impacting Tesla stock. So I took a little deeper look, and I found out that AJ has been talking about the way things could turn out with regard to this vote. And he says, by the way, if you want to follow him, AJ is at ALOJOH on X. He says, "I see a lot of pessimism around the Tesla vote on Elon's comp package. Consider that the vote would still go through even if the following happened." He says, "Note below percentages are based on share count and not on number of investors, because the number of investors doesn't matter, it's the shares." So he says, number one, 62% of institutionals participating vote against. So even if 62% of the institutionals voted against, with participation at 90%, it can still pass. Number two, Tesla management is only able to mobilize 20% of retail money, and only 80% of those vote positive. And he says, or, he doesn't actually say and or. I'm not sure whether he means all three of these or each one of these. He says employees participate at 60%, but 95% vote in favor. He then goes on to say these thoughts. 1A, even amongst institutionals, there isn't a 100% compliance rate. So not 100% of the institutionals are going to vote. Number B, 1B, do we really think that roughly more than 2/3 would vote against Elon? No, I don't think 2/3 are going to vote against Elon. That's pretty clear. 2A, 20% appears to be achievable since there are a number of larger retail investors who most likely voted predominantly for. And then he says, number 3, Tesla likely pushing very hard internally on employees to vote their shares. Tesla did externally. They're going after the retailers and the institutions, actually setting up meetings and or doing advertising. So if they're doing that kind of work externally, we could easily assume they're going to do so internally as well. All right, so that's with regard to the vote. We're now less than 30 days away from that vote. I think, pretty sure it's June 13th. We'll see what happens as we get closer to that date. So on other news, Tesla is now offering a choice of a 0 down payment or 0% interest rate on the Model Y and the Model 3 in China. Now, I'm assuming again, because I don't actually know, does this mean that Tesla is actually lowering the price of the car by the amount of the down payment? Because it'd be one thing to say, oh, we'll give you, okay, we got a $35,000 car. Normally, let's say the down payment would be $3,500. And so is a 0 down payment, does that mean it still cost you $35,000, but you can finance the entire thing? Or, and by the way, I looked at 2 articles to see if I could figure out which of these is true. Or does it mean Tesla is buying or taking that $3,500 on themselves, and so the car is really you're financing still 35 less 3,500, 31,500. You're only financing that amount at the full interest rate that's currently going. I think that's what it means. So that would mean like a $3,500 discount if it's a $35,000 vehicle, and of course it's going to be more than that. And then on the interest rate reduction, that would be you're paying the full price, but you get, instead of the current interest rate, you get a 0% interest rate. That's a very common deal that car makers have been offering for years and years and years. You might have had a similar offer made when you've been going, or sometimes it's just an amount. We'll give you $3,000 off, or we'll give you 0% interest. So, people can make their mind up which one of those two makes the best sense to them. Anyway, I don't think, since that would be a price cut, and the deal is good through the end of June, and so it's a long-term price cut, I don't think that's what's pushing the stock up this morning. All right, next news. It says, I don't normally report like little details about wheel sizes and, paint colors and all that kind of stuff, but I thought this was particularly interesting today because the Cybertruck does need a lot of accessorizing, and we've been kind of thinking that this accessory program would starting to get going, and here we go. So Sawyer Merritt is reporting today we've got 4 different accessories that have been announced. One would be a spare tire and toolkit. I'm assuming that's the one that goes on the back, vertically on the back of the truck. That would be $1,250 for the tire and the toolkit to mount it. Number 2 would be mud flaps for $100. Number 3 would be underseat storage bin for $250, and number 4 is D-rings for $40 set each. I don't know. I think it'll be some kind of a set of D-rings for $40. All right, then we go back to AJ again for more news. AJ coming out this morning. He says exactly what I had predicted. Tesla gets approval for its Berlin expansion. Well, we all predicted that. We didn't think that they were going to buy the doggone neighbors. They asked for a vote from the community. What do you think about this expansion? The neighborhood said, "No, we don't want it," and like 17% of the 17% vote. Anyway, after the failed public vote in February, Tesla and the local politicians worked out a compromise, and they're moving forward. Local politicians understand the value that Tesla is adding to the district. All right, then we got this news. I think I might have reported this the other day, but I think it bears repeating. Elon Musk says, by the way, 12.4 goes to internal release this weekend and limited external beta next week. Roughly 5 to 10 times improvement in miles per intervention versus 12.3. 12.5 will be out in late June. That will also see major improvement in miles per intervention and is single stack, no more implicit stack on the highways. So again, this is where I'm going to be talking about this in a minute. It's all going to be about FSD over the next weeks, several weeks. You know, obviously there could be breakthroughs on robotaxi. I mean, I'm sorry, there could be breakthroughs on Optimus. There could be big discounts on cars. There could be shortfalls on numbers on July 2nd. I mean, there's all kinds of things that can move the stock, but FSD is going to be the thing that's going to really move the stock over the next weeks. By the way, I was slightly off in my reporting. I think this was a couple of days ago. That lawsuit in California claiming that FSD was false advertising was not brought by the state of California. It was actually a class action brought by some owners. The judge is allowing that suit to go forward as a class action. Now, the other point of my reporting was correct. This has almost no chance of getting to the finish line because there's lots and lots of opinions out there that have been written on previous cases that the company they have to prove that they knowingly lied. They're going to have to find an email that said, FSD is 10 years away. I mean, it's going to have to be really obvious that Tesla was lying, and I don't think they're going to find that smoking gun. So shocking. So the stock went down on Wednesday, and I think this might have had some impact on it, but the stock did recover yesterday and is going up today. So long-term, I think people get it. This has almost no chance of success. All right. So this is from the street. Dell and Tesla seem to be having a meeting of the minds about what's happening with AI right now, according to Evercore ISI analyst Amit Daryami. On Thursday, Daryami raised his firm's price target on Dell to 165 from 140 and affirmed an outperform rating on the shares. Why did he do that? Well, because they found out that Dell had won a large portion of business for Tesla's AI server build-out, which he says would be incremental to the company's current $2.9 billion AI backlog. Asked for comment, a Dell spokesperson said in an email, we're in the quiet period, and we will share our latest financials, including our server business, during the Q1 earnings call on May 30th. He said the analyst said that the investment firm's impression is that Super Microcomputer had won some of Tesla's AI service business as well, but allocations are heavily skewing towards Dell. His analyst suggests that this presents a roughly $2.5 billion to $3 billion revenue per order opportunity for Dell, probably in calendar 2024. So this could be moving the stock. It's moving Dell, but maybe it's also moving Tesla. We'll look at the stock numbers in a few minutes to see if we're still positive today. This is Randy Kirk, by the way. If you haven't hit the like button yet, did I cover the news well? Anyway, hit the like button, hit subscribe, hit notify. We will start having guests again, maybe even as early as this afternoon, but certainly by Saturday and Sunday and Monday and Tuesday, all the regular guys will be back and we'll be talking about all this stuff. And we will have a Good News Friday tonight for sure. Yeah, I might even do if I have time, I don't know. It's getting late in the day, but I might even have time to do Elon's tweets. That would be fun. Huh? I haven't done that for a while. Okay. Oh yeah. It's time. We need it. Okay. I'm back. No more vacations for a year. So it's now time to help produce the show. Down below, you can find the link over to provide $3 a month, $5 a month, $10 a month. It would certainly be a big, big help. And there are free gifts associated with if you come in to it, the program at the $5 or $10 level. All right, this is from Fortune magazine on the general economy today. There are a lot of inflationary forces in front of us, said the CEO of the world's most valuable bank. Yeah, this is in an interview with Bloomberg Television on Thursday. We had JP Morgan boss Jamie Dimon saying the chance of inflation staying high or rates going up are higher than people think. He cited costs related to transition in the economy, to circular sustainability and infrastructure spending to make it more productive. It's the costs to get there, putting upward pressure on prices like copper. Have we noticed copper? Like silver. Have we noticed silver? like natural gas. Have we noticed natural gas? Increase government outlays to service the national debt and boost military capability. Additional risks affecting the inflation outlook, not to mention trade disputes, which he mentions a few trade disputes, like the one where Biden has just unnecessarily poked China in the eye with regard to some new tariffs, which I reported on in depth yesterday. So he thinks that, the government is spending more and more money on interest. That's inflationary. The government is spending more and more money on military. That's inflationary. All right. So then we've got, he says earlier this week, the Biden administration quadrupled import duties on Chinese EVs. We knew that already. And to protect American jobs, baloney. Since businesses can barely digest these costs, they are typically passed on to the consumer through higher prices. Okay, but quite frankly, the things that he changed, I don't think that it's going to matter to anything. And I'm surprised Jamie Dimon didn't comment on this. The things that there are no Chinese imported cars now. It's not going to reduce the number of Chinese cars, or it's not going to increase the price of something that's not being imported. There's very little Chinese steel being imported now. That might be impacted a little bit, but not much. I don't think there's much Chinese aluminum being imported now. I could be wrong, but I don't think so. And then Chinese batteries, yeah, now that's a place where it could have impact, except the U.S. is adding tons and tons of capacity already, so I don't think it's really going to have an impact there either. I'm surprised Jamie Dimon didn't say that. Anyway, should these various effects combine to keep inflation elevated, the Fed may have little choice but to maintain interest rates at their current high levels. They're not that high. We got to keep that in mind. Keep in mind that interest rates are not that high. If they are then paired with sluggish growth, Dimon predicts economic sectors with weak balance sheets will soon find themselves in trouble. He cited real estate, leveraged companies, and private credit as potential sources of volatility. I agree with all of those. Whether the world is pricing in a soft landing, whatever the world is pricing in, whatever the world is currently pricing in for a soft landing, I think it's probably should be half of that, Dimon said, calling equity valuations not just high, but very high. Listen to that carefully. I think the choices of something going wrong are higher than people think. From Barron's, Bank of America, which surveys trillions of dollars worth of equity funds, revealed that investors are feeling their most bullish on the market since November of 2021. Bank of America's measure of bullishness essentially accounts for how much stock the fund managers own and how fast they think the economy can grow. Simply put, people want to be heavily invested in the market because they think the economy and the corporate profits will continue to grow. The U.S. has sidestepped recession so far, even though the Federal Reserve's aggressively lifted interest rates in 2022 to try to damp down inflation. So we've had this big surprise over the last 18 months where every month, over and over and over again, all the pundits were saying, we're going to have a recession, going to have a recession. Randy says, we're not going to have a recession. We're not going to have a recession. Oh, we're going to have a recession. We're going to have a recession. Oh, no, inflation's going to stay high. I'm going, no, inflation's going to be coming lower. Okay, now here's what I'm getting a few minutes. I'm going to tell you what I think is going to happen next, because right now we've got these bullish people out there saying no recession, soft landing, no landing, everything's great, everything's wonderful, inflation's going to come down, interest rates are going to come down. I'm saying baloney to all of it. I'm on the other side of the card on all of that, except I still haven't called for a recession yet, or I pulled back my call for recession. Anyway, that combined, it says, with ongoing job gains, would keep the economy growing and allow companies large and small to see sustained growth and profit growth. But that's why fund managers don't want to miss out on more market gains. And that's why they're loading up on stocks, pushing the S&P 500 up 48%, 48% from late 2022 low point. Fund managers are now the most overweight equity since January 2022. In the May survey, a net 41% of investors surveyed had an overweight position in stocks, up 7% from April. They've used up a lot of cash to buy stocks. Cash as a percentage of the average portfolio is down to 4% from 4.2% in April, the lowest percentage point since 2021, first half of 2021. This dynamic when everyone is already super bullish is a sign investors should be wary about stocks. All the high fives about the current rally are a bit worrisome, writes Nicholas Colas, DataTrek founder. Instead of yelling, you should be selling. The rationale is rooted in the fact that there's now much less money on the sidelines to bid stocks higher. Sure, cash allocation levels have been lower in the past, but not by much. Managers have already used up tons of cash to buy up most of the stock they wanted, and they're maintaining some allocation to cash, which yields about 4% today. That makes sense, especially because risks to stock remain. In fact, the current cash level doesn't trigger a buy signal for B of A on the stock market. Instead, the bank is now neutral. So after 4 weeks on the road and a time of respite, sort of, and so much news to digest, here is how I'm seeing things on my first day back on the job. The economy's humming along, but it's not going to get the productivity boost from OpenAI soon enough to avoid a very flat to down third and fourth quarter. Just listen to a long interview with Sam Altman yesterday where he says, look, this AI boost, the productivity boost from AI is not going to happen fast. It's going to take time. You're not going to just wake up one day and, oh my gosh, look at that, a big productivity increase in the third quarter because of OpenAI. No, because of AI. No, not going to happen, he says. I agree with him. It's going to be slow over time. Number two, the consumer is out of gas, and the government is not going to save the economy this time. Not a chance. There's no way. There's not going to be new spending coming in from the government in the third and fourth quarter, and the consumer has clearly run out of cash. Everything points to the fact that the consumer is pulling back right now. Yes, I know. Last week, we had good numbers from anyway, we had some good retail numbers last week, but the overall retail numbers are terrible. And no, here's the key. Here's where I'm looking at. Retail is not looking good across the board, except in very limited space. Housing starts down, housing permits down in season. That's not good. Auto doesn't look good. Looks to me like auto's is soft. And if you don't see some increase in all three of those, that makes up a huge percentage of the economy, then where's it going to come from? So I see the GDP probably flat in third quarter, probably flat in the fourth quarter, but potentially even negative in one or both quarters. So what does that mean for the stock market? Well, the stock market, in my opinion, is stretched to breaking. Anytime you see something just go way out here, 42% up in like 8 months, whatever it was, 11 months, the stock market is stretched. S&P is stretched. NASDAQ is stretched. Dow is stretched. They're all stretched. And I don't buy the argument about not enough cash on the sidelines, because there are plenty of cash that could be brought in if necessary, because it's just huge out there. But I think the smart boys are already getting ready to take their profits. Maybe some of them already are taking their profits. And so I'm looking for a 10% correction minimum, more likely 20%. There's just not a chance that the government has anything left to come in and keep the rally going. So I do think that we're going to see that 10 to 20% correction, but I also believe that the market will be up from these levels by year end. So we'll see it down somewhere along the line. We're going to start seeing that number go down, and then we'll see. We'll go back. We'll correct that and go back up again, because long term the economy is going to be fine. And we won't have any help from the Fed either. Inflation might moderate, but it will not be soon enough. So there's no cuts. Earliest possible cut, November. Not a chance there's going to be cut in June, July, August, not before the election. Not going to happen. And then also, speaking of elections, there is one thing that could help the stock market, and that is the hope of a change in government. And I'm not saying that as a Republican. You know where I stand, philosophically, politically. But the reality is, a change of government is always bullish for the stock market. Like 99, I don't know, that's too high. A very high percentage of the time, a change in government, an expected change in government, is very bullish for the stock market. Okay, then how about Tesla? Tesla fundamentals have shifted to FSD, Robotaxi, and Optimus. Elon wanted this to happen. He started talking about it almost a year ago. He says the company is an AI company specializing in robotics. So the rest of the company is poised for absolute greatness. And I'm super excited for the potential sales and profits from Sexy, from CT, from energy storage and semi. But you don't see that in the community anymore. That's not what the community's talking about anymore. Everybody's talking about FSD. Everybody's talking about robotaxi. Everybody's talking about Optimus. And that's also true now of a lot of the outside pundits like the Dan Ives of the world. That's also what we're seeing now is those folks are starting to talk way more about the AI potential, even Dojo, even the massive amount of compute that Tesla is amassing, the amount massive data centers that they're building. It's all going to be coming down to that. So the narrative has shifted, and that's where the eyeballs are right now. FSD version 12.6 and 8/8, August 8th. Okay, so too with the stock. Sure, it's going to go up and down during during the next couple of months for all the regular reasons. But the FSD results are going to be the real attention getter. The trading range between now and 8/8 will be, I would say, between 125 minimum. I don't think it'll get that low, but I think that's the absolute minimum it's going to go down to. I think it might pop up above 200 to get to around 235, especially as we start running up towards 8/8, depending on the rumors and the sightings. Okay, there's going to be rumors about what's going to happen on 8/8, and then there's going to be potential sightings of the robo-taxi, the unit itself, whatever it's going to look like, and also possibly of the generation 2.2 car, 2.5 car, whatever you want to call it. So if we see sightings, if we hear rumors, all of that could start creating a lot of FOMO between now and 8/8, and we could see something above 235. Then if we get some confidence on 8/8, and beyond 8/8, if we're starting to get some confidence, like let's say like 99% confidence of FSD complete and robotaxi imminent, or if robotaxi actually starts to roll out, even with supervising drivers, anything that happens that actually moves that ball forward in a significant way, I think we're at 700 by year end. That's been my number for a very long time. And I think we're at 1,500 in 2025. Now, if Optimus is released, then in addition, if Optimus is released anytime, whenever that happens, and we actually start seeing Optimus going out into third-party consumers, now we're talking about the stock going to 2,000. So where are the markets now? After all of that, what is happening now? Let's start with Tesla. Tesla is still up $1.71. It was up around $4, so it's pulled off of those numbers. The market in general has been flat all day. We've got the Dow up 65, NASDAQ down 19, S&P down 12 cents. And we've got the Magnificent Seven all down. Google is up, Tesla is up, Amazon is up, and the rest are down, including NVIDIA down $12.64. We have got the Cathie Woods basically actually all up, a couple down, but almost all of them are up. So that's interesting that they're having a good day. All right, and let's look at the percentages right now. At 10:55 is when I'm reporting this. We've got the Dow up 0.17, NASDAQ down 0.11, and the S&P basically zero. Okay, let's go ahead and take a look at those bonds. We have got the bonds sitting today at, wow, okay, so Cathie Woods are all up, and Tesla continues up, even though the bonds, the yields have surged all day. They've been going up and up and up all day long. We've got the 10-year at up 4.7 basis points, sitting at 4.424. So going back towards that 4.5 number again, you got the 2-year up 3.1 basis points at 4.822, almost exactly 40 basis points difference. And we've got the 2-month unchanged for the day and actually not being published for some reason. That's interesting. There's no published amount for that. Maybe, I don't know what's going on there. Okay, and then let's go ahead into, and it was the only one on the list that there was no number for it in terms of what it's selling for at this moment. Okay, let's go over to oil. We've got oil at almost $80 again for the Texas Intermediate, up 64 cents. So that is starting to move upward again. Brent at 83.84, up about the same amount this morning. Natural gas up 4%, 4.37% at $2.60. That is a very strong number for natural gas and might be helping the oil prices to pop today. We have got gold up 31 at 24.17, heading to all-time highs again. We've got copper up 3.67% again, $5.06, breaking through even the intraday all-time high. Silver up 4.68%. I mean, what's happening with the commodities? Now, again, I have not looked at the rest of the commodities. In general, the rest of the commodities have not been going up, but we've seen copper, gold, silver, natural gas now, oil, recently, all of these are heading up. This is not indicative of inflation being over, okay? The dollar is edging up a little bit, but overall this week it's been a little sketchy, but at very high levels. We've got the Bitcoin up 1470 at 66.7, right in the middle of its trading range. And that would be all that we report on. Let's go back, look at Tesla. If it's moving, continuing down a bit. It is only up. I'm sorry, I did that wrong. We've got it up $1.79. So yeah, kind of in the middle of where it's been today. I think it was up 350. It was down for a minute, a buck or two. So kind of trading this way. And that's kind of the way things are right now. A lot of additional reporting coming in next week that'll be valuable and interesting, that will certainly be impacting stocks and the markets. So let me know what you think. I'd love to hear your comments now that I'm back. What do you think about my analysis? Where am I getting that right? Where am I getting it wrong? Love to hear your thoughts on all of that. In fact, that's another thing I should do this weekend. I'm going to go back through your comments over the last couple of weeks. And I think it's probably time, and maybe especially comments right now. The comments, those of you who stayed to the end, and just tell me that. Say in the comments, I stayed to the end, Randy, and I listened to every word of your thoughts about how things are going forward. And here's what I think about what you had to say. If you do that, if you say, if you let me know that you stayed to the end and you have some comments, at least if they're halfway, if they're not totally brain dead, then I'm going to include you in that YouTube later this weekend. All right. Hey, that's enough for now. It's been great talking to you.